Bonjour, hello everyone, and welcome. I'm Courtney Fingar, and I'll be the moderator today for this series of keynote interviews looking at asset classes. First of all, please forgive us the delayed start. As you'll have realized, our special keynote speaker ran over a bit, but I'm sure you enjoyed hearing those remarks, and we're really glad that you could join us live and in person, and hello to those who are watching it on streaming as well. What we'll have today is a series of rapid-fire interviews, just 5 minutes each. We have experts here to talk about a range of asset classes and industries, looking at hospitality, healthcare, logistics, retail, co-working, co-living, and housing. So we have a quite broad range here. And I will ask each of our experts, when they join me here in the hot seat, to tell us the lay of the land for those particular industries and asset classes. What are the challenges? We can probably guess at a lot of the challenges at this particular strange moment in time. More importantly, what are the opportunities and what are the prospects for recovery? Now, we have a great slate lined up, as you will see, and we will ask each of them to be quite brief and give us some short but insightful answers. You also have an opportunity to ask questions. I don't get to just have all the fun, so please use Slido and submit your questions, and I'll do my best to get to them as much as possible. If you can mention in your question which speaker you're aiming this at, or at least which asset class or industry you're referring to, that will help a lot. So without further ado, I would like to invite our first guest, and that will be to talk about healthcare. He is Frederick Dibb, President of Mosaic Asset Management. Come on down to the hot seat. Welcome.
Hello.
Well, obviously, healthcare is really at the heart of what's gone on here with the global pandemic. So from where you sit, what does that mean? What's the market look like? And more importantly, where can we find some glimmers of hope and opportunity in it all?
Hello, Courtney. Hello, everybody. Just maybe very briefly, Mosaic Asset Management is a specialized real estate asset manager, specialized in healthcare real estate. So I'm not on the operating side, more on the real estate side. And what we have seen, real estate in the realm of healthcare in the realm of real estate is a relatively niche market in terms of volume. And what we have seen, frankly, is a lot of interest from investors that were not used to look at this space. Why? Well, I guess for just what you said, is that it's at everybody's, it's on everybody's priority list today. Everybody is thinking about it, and in a way realizing the importance of healthcare, the fact that it is a necessity, and that you have buildings that are sort of purposely built to cater for these types of need. And of course, I think healthcare is also benefiting from the fact that the larger markets, segments that are offices and retail, of course people are sort of scratching their heads, thinking what's going to happen to those markets. And when you have maybe this would represent, I'm not sure about the numbers, but I guess 70% of the market for real estate. And when you have that, just scratching at their heads, shifting maybe 5 or 10% of that huge volume, of course it creates a lot of interest for the smaller niche that healthcare represents.
And as this is an area, as you said, that investors might not have been overly familiar with or might not have been front of mind before, how can they make savvy choices, and how can you guide them through it?
Well, I guess, of course, they should talk to specialized asset managers. Of course, that was maybe the reason why they were not coming into that market, is because perception of that market is that it is regulated, which is in some cases isn't in other. In a lot of the responses we had before, and we still have, of course, to that market or segment, was that there was in some areas what they call reputational risk, what it means, I guess, is that people may die. Well, yes, of course, and I think we have realized that even more. And you have two types of reaction: people thinking, okay, we may have that, but that's what it is for, and they go beyond that. And some others, it's still something they don't want to get into, or they want to get into healthcare, but maybe not the more acute sort of segment, i.e. acute clinics and nursing homes, but would rather go into assisted living or senior living or co-living for seniors, or medical offices, these types of lighter, or rehab clinics, lighter in terms of death and morbidity, lighter asset classes.
In which segment do you see the greatest opportunity at this moment?
I think the one that is really developing at least in European markets is really assisted living, senior living, because it's actually effectively a new market in the way that before you had senior living was just a big mass, and you had a quantity of people from people who are just being a bit less autonomy to really the last sort of month before people were dying. And effectively, nursing homes are really catering for the very last 24 months of life on average, of course. Just to put numbers, I mean, in a nursing home, the average age of entry is 85 years old. The average length of stay is 24 months. So it's really for people who are very highly dependent, either psychically or physically, and so this has been concentrating in the last 10 to 15 years, and and effectively has opened up a new space for the assisted living, which is for people who are less dependent than that, but still are less autonomous, are feeling that they need a bit of protection, they need easy access to services, and this is the space that is being created.
Thank you very much. Well, we will release you now. Thank you for the short and sweet and interesting debate. And I guess with an aging population, that assisted living is going to be important, pandemic or no pandemic. Thank you very much for joining us. Next up, I will invite Cecile Tardo. She's the Chief Operating Officer for Investment at Business France. This is a government agency that's supporting investment promotion and business interest here in France. So she's coming from a slightly different perspective, not being on the investor or private sector side. And of course, Business France works across a range of industries, not just hospitality, but you are here to kind of tell us what can be done to support this industry at a very, very vulnerable time.
Hello everybody, thank you for the invitation. Yes, Business France is in charge of helping foreign investors in their project in France. We act in lots of areas. In real estate, for example, we have a portfolio with the public real estate department of the Ministry of Finance that gives us some high-profile projects that could be proposed for foreign investors, for example. We also help to promote the turnkey industrial sites that the government has identified all around France, 78 projects where you can have high visibility on administrative procedures. So we try to be helpful for investors on those industrial sites or any kind of projects by foreign investors.
Well, and it's a very challenging time for foreign direct investment. There are estimates that worldwide levels of investment may drop by something like 40% this year. So what can you do? Are there targeted incentives for hospitality and other sectors? What can you do to try to, I guess, stem the bleeding in terms of FDI flows?
Yeah, you're right. Times are hard. I would say that today everything is different. Everything is changing, but nothing changes at the same time. Times in hospitalities are really harsh because it's even worse than 40% in hospitality. We can see that the drop in projects in the first semester of 2020 is more like a 50% drop, and the sector was really hardly hit. But the French government had a really strong and quick response to help the sector. So what was done was to try first to help the sector to survive. So we had lots of different measures to help. That was government-backed loan for the sector, help for employment, and that all kind of different measures that were adopted during the springtime. I said everything changes because also we see that there is a change in mentality concerning hospitality. But the response is here today. In fact, we are gathering. It's quite difficult. It's quite empty, but it is different, and we can make it. So the real change for foreign investors' perspective is how to adapt, how to have flexibility, and also what is really, I think, a new trend that was before even the crisis: how to be green. So that is something that has to be now taken into account in all kinds of sectors, and hospitality in particular. So the response on those new needs by the French government was to have a recovery plan. One of the main axes of this recovery plan was green incentives in order to rethink the economy, not to try to come back to what it was earlier, but to think how could we do it better and be stronger and be greener in the future. So we have a recovery plan with something like 34 billion euros to be oriented towards green technology, green economy, green renovation for buildings. We also have a recovery plan for competitiveness, and same amount, something like 30 billion euros. And also a recovery plan is aiming at talents and competencies. So the main issue today is how to rethink our economic model to be greener. But when I say everything changes, but nothing changes at the same time, one of the main reasons for investors to come to a market is the size of the market. And we see that France is still a really strong market. One of the reasons for hospitality to choose a market is all the perspectives and variety of activities you can have in a market. And France, for example, will have lots of sport events, thinking 2033 rugby, 2024 the Olympic and Paralympic Games. So the perspectives short-term are difficult, but on long-term, the strong assets that France had remain the same.
Thank you very much, and I guess we've got just a couple seconds left. If you were to give your very quick elevator pitch for investing in France at this moment, what is it?
At this moment, I think France has done the job before the crisis, trying to reform and being pro-business oriented, with the main difficulties that have been lifted on procedures, administrative working conditions, and a legal framework. And now we're thinking of the future, 2030. So I think if you want to look forward the future, that's good to choose France.
Thank you very much. We'll end there just on time. Thank you for your time. And next up, we have a speaker joining us remotely, so I hope he's here on video link. And this is Giorgio Manenti. He's Managing Director of Eastdil Secured. And do we have, yeah, there he is. Hello, Giorgio. Thank you for joining us. Tell us where you sit in terms of hospitality and how you see the market and the challenges as it stands right now. I think he's not hearing us. Giorgio, can you hear us? I'm not sure. We'll give one last chance, and then we might need to bring another live speaker. Giorgio, are you hearing the question? Okay, I think we might need to give a few minutes to try to sort out the technology there and hopefully come back to him. We have two speakers remotely. I think Giorgio followed by... Oh, can you hear me now? Excellent. Hello, Giorgio. Thank you for joining us.
I just had my mute on. I think they're nearly finishing the on-stage interview at the one just before you, and they'll be putting you live very soon.
Okay.
We actually have you live now, Giorgio. Can you hear us? Hello, Giorgio. I think we might need to return to him. I think I'm going to go ahead and invite out Cecile because we're very short on time and hopefully we can get Giorgio hearing us. I would like to invite Cecile Trickle, Senior Vice President for France and Southern Europe for Prologis. Welcome. And Prologis is a major player in the logistics space, so you're very well placed to tell us what's going on there. Now, supply chains are very front of mind at this current moment in time. So how do you see the state of the market? In some ways, maybe it's good for business for Prologis that we have such an urgent need for goods to get where they're going, especially medical devices and so on. So what are the challenges right now and the opportunities for you?
Good morning, Courtney. Good morning, everyone. Yes, to start with, yes, Prologis is a global player in real estate logistics and industrial. We are based in all continents, America, Europe, and Asia. We manage almost 90 million square meters of industrial and logistics assets, and we serve more than 5,000 customers. Most of them are global, so yes, we are serving our customer with really an aim of excellence. So the challenge is now, I think logistics has become the preferred child in real estate. It has long been a kind of a diversification asset class. And it was not as fancy as some other asset classes. And I think already before COVID, when the e-commerce started to grow, logistics has become very visible, and this has been emphasized with the COVID situation. I would say there are three trends that serve this. The first one is we have realized during the COVID that supply chains had been so much optimized that we were really relying on foreign countries to provide goods and supplies. And supply chains are now moving to more resilience, which means that first of all, some of the production should and will come back and will be more local. No, local doesn't necessarily mean French. It does mean European, for instance, or get and maybe also on the north of Africa. So production will be relocalized. Together with the resilience will be also based on increased stock. Of course, this is to the detriment of costs. So optimization had really reduced the cost. So now companies will be more likely to maybe increase their cost, but to serve safety and to serve resilience. And of course, what we have seen during the pandemic is a rush to the e-commerce, which had started, of course, way before, but has been completely increased during this crisis. And I think these three factors will definitely increase the need for logistics all across Europe and the world.
And as the supply chains reorder themselves around the world, where do you see the most important distribution hubs developing? Will that change where we see the clusters of logistics activity worldwide?
I think the clusters are very well identified. These are the big conurbations, big cities across the world. But there are also logistics is a long chain actually. It's from production to delivery to the final customer. So one of the also movements that we can see is that there will be big clusters with big boxes as we are used to building and to managing. But there also is a move to what we call urban logistics. It's very well fashioned at the moment because we need to get as close as the customers as we can, because one of the constraints, which in our view is more an opportunity, is of course the increase and growing environmental concern, and we cannot anymore serve customers from a big box outside the big city like 25-30 kilometers. So we have to diversify or to complete the supply chain and the delivery chain down to the cities. So there's a big challenge here.
Yeah, so I suppose that is one positive that could come from this change, and as supply chains are rethought and you move closer to the consumers, there is a green bonus in all that.
Yeah, there is definitely a green bonus because one of the challenges for logistics and one of the reluctancy we get sometimes is that logistics brings new trucks, pollution, traffic, sometimes ugliness. And really there is a big opportunity here to structure something, and as much structure it will become, at least the congestion, the traffic congestion and the pollution will happen. So there's a real real opportunity in environment, and at the same time, as logistics is kind of a more simple asset as maybe offices, retail, hospitality in its building and construction specifications. There is also a lot of work which is done at the moment to make our buildings greener and to really work on the environment. And for instance, we are starting construction for a 100,000 square meter building in the south of the Paris region, on which we have managed to reduce the carbon impact by 80% just in building it differently, thinking of the energy consumption and implementing a lot of innovations. This is made easy because this asset class is much simpler than the others.
Thank you very much. Yes, at least one thing we can all understand is the concept of moving goods from A to B, and we will always need that. Thank you very much for sharing your time and your insights.
Thank you very much.
Best of luck to you. Now we will see if our remote setup is working. Giorgio, hello, can you hear me?
Very well, thank you, and hello everybody.
Excellent. Well, welcome. Obviously, we've been talking about the asset classes impacted by COVID, and hospitality is one of the ones suffering the most drastic impacts. From where you sit, what do you see as the current lay of the land? Where can we find opportunity and recovery and investment opportunities?
Yeah, no, thank you for that. It is true, I heard before about logistics being together with PRS probably where a lot of the capital is going today. There is no doubt that hospitality has been impacted to levels which have been unprecedented. Just anecdotally, London, first week of September, registered an occupancy of 5% with only half of the assets open. And Paris, I think, hit around 3% with 70% of the stock open. So unfortunately for those in the know, a hotel at those level of occupancy will lose around €1,000 per month per room. So there are a huge amount of hoteliers worldwide which today are using up reserves and excess working capital to stay afloat. So the situation is very tough. There are two winners though which have emerged already very clearly. One is the extended stay apart hotel business, and the other one is the budget sector. The two have reacted much faster, dynamic pricing, high margin businesses with very few staff. So across Europe it's been very clear that those two have already shown good signs of a return, not to normality, but certainly to at least the breaking even levels. And this is why, if you followed the news, those are where we've seen some of the activity at the portfolio level on the investment side. When it comes, sorry, you were going to ask a question?
Carry on, go ahead.
No. When it comes to, again, what is trading today and where the opportunities are, we've seen a lot of activity in the single asset space, especially the mid-market single asset space. I would say dominantly in Germany. They seem to have reacted better and managed better the pandemic. Their corporate activity and their travel patterns are stronger in country, and therefore we have transacted already in Germany in COVID quite a number of hotels. The UK is probably the worst affected. It's a double dipping of on the unfortunate Brexit situation together with the regional markets which were already falling pre-COVID. And there actually we have started quite a substantial amount of loan sales. So, again, that's an area of interest. Certainly what I would call the deep value guys and the private equity guys will be watching that very closely. If you can buy a loan, 60, 70 cents to the dollar on a previous COVID 60 LTV, effectively you're buying the asset for less than half of what it was sold just a year ago. So that is certainly an area where there's been a huge amount of activity.
And geographically speaking, you mentioned Germany, and I guess the prospects are closely tied to each country's handling of the pandemic and its recovery. What other bright spots do you see as you look around Europe or elsewhere?
Yeah, I think I was very impressed with France's secondary cities. Marseille outpaced Paris. Lyon has had good results, Bordeaux. So it's very interesting to note how these local markets that are not reliant on a huge amount of international inbound are actually doing better because their corporate travel is actually people that need to be on site, be it engineers, project work, and therefore where they can hold a little bit of also leisure, that's why I mentioned those three cities, effectively they're certainly the bright spots. And it's a little bit a repeat everywhere. So, Brighton has had a great quarter. We've seen, Valencia and Seville do better than Madrid and Barcelona. So secondary cities with local corporate and a little bit of transient leisure are the ones which are outperforming today.
Yes, and I assume secondary cities may well get a boost from the working from home phenomenon as well, in terms of people not necessarily needing to cluster in large cities for work. So we've just got a couple seconds left. Is there any other words you'd like to leave us with, prospects for the future?
Oh, I think that we're expecting regional markets to take 5 to 7 years to go back to peak. Probably city centers will bounce a little bit. Capital cities and city center location will bounce a bit faster, but this is going to be a very slow burner. But the sector is not broken like maybe some say around retail. We think the fundamentals are strong, and travel patterns will change in the sense that people will probably travel longer, so 2 to 3 day stays rather than a day trip. So we don't think it will affect room nights, but it will affect, I think, systematically the frequency of travel.
Thank you very much, and we hope next time you'll be able to travel to join us here, but thank you for joining us remotely.
Okay.
And moving on, we'll see if our next speaker is ready to go. That should be Patrick Nelson. Do we have him here? If not, if we need a minute, we will bring another live speaker. If Ian is there, have we got Ian? So I think we're tracking down Ian, and we'll see if we can load up either of our remote speakers either. We caught him off guard. Hello, there he is. I'd like to present Ian Stanford. Sorry, we might have caught you a little off guard. He's president of Eurofund and Into Costa del Sol, representing the retail sector. Now, the retail sector is not really having a good time these past few months. What do you see as the prospects for recovery? Where might it come from?
Tell me about it in terms of not having a good time. I've been saying to the people over the last little while, what we're doing is we're watching the same film that we had before COVID. The only difference is now we're watching it in fast forward. So the change which we all saw was going to happen is going to happen a lot faster. So massive change in our sector.
Well, and what changes has it accelerated? Obviously, there were already things going on with e-commerce and fewer people visiting shops in person, and this has clearly accelerated that. What other changes have been brought forward in fast-forward fashion?
Essentially that. Essentially the drive towards this omni-channel presence, the realization that the estates which retailers have don't necessarily fit what they need today. We're going to see a smaller number of shops, bigger shops, more experiential shops in more experiential locations. And they've got to adjust their portfolio to that. And from that will come winners, and from that will come losers, and within those both sectors comes opportunity.
How well placed is the industry to react to these changes and to do what they need to do to survive? Or is that pretty uneven amongst the players and the different geographies?
I think it's very uneven, not just in players in geographies. I think within the abilities which we have within the sector. I think one of our big strengths at Eurofund is that our history is development, then went into asset management. So we're not afraid of big change. I think many people are afraid of big change in the retail sector. And that's a big problem because they're going to have to address it. There is going to be massive change.
Well, change gets forced upon you sometimes, whether you like it or not.
Absolutely.
Could you describe for us the retail shop of the future? The future is sort of coming at us at lightning speed. What does that look like?
The shop is just walk around a Zara of today. Some of the latest Zaras of today. Look at the way that Apple have been moving and what they've just done in Singapore. They're the futures. Creating great experiential locations where people want to go. You don't have to go anywhere to shop today. You can pick up your mobile phone, buy whatever you want. So you now have this motivation. You need to go shopping. You don't have to want to go shopping. So we have to create shops and places where people want to go and spend time. And
how are shopping malls poised for this as opposed to, say, your typical high street?
It's very simple in my view in order to work out as you'd say, the quick and the fast in terms of the winners and the losers here. There is going to be a dominant retail destination, and it's not just retail, it's fully mixed use in terms of a destination. A dominant destination of which retail will be a big component, and the rest of them are going to have to be transformed into something else. So you've got very complicated planning rules. It's always been very, very difficult in retail to get planning. It'll continue to do so. So it's going to be a complicated space to move around.
And we've got just about a minute left. What could the public sector, what governments do to assist the industry at such a dangerous time? Or is there anything?
Yeah, it can, very simple, simplify the planning processes. Planning is an absolute nightmare in Europe. It's only going to get worse. We've looked at projects in China, and when you go and work over there and you sit down with the local authorities, things happen quick and things happen slow in Europe. So please change the planning.
Thank you. So that's a good call to action at a critical time. Thank you very much for your time. It goes by, our session went too fast, but we appreciate you stopping by to share your insights, and best of luck to you.
It's a pleasure.
Thank you. So I think we'll have to draw a line on it. I think what we see here is, we have a lot of talk and optimism about working remotely. We see now that, of course, there are challenges associated with that, but we shall find our way. With a hybrid event such as this one, it's a whole new world. There are inevitably some glitches. So I would like to say a very big thank you to those who did come on stage and let me pick on them for a few minutes and ask them questions, and to Giorgio, who joined us remotely. Thank you very much for your attendance and your attention, and do forgive us any of our tardiness and the technical glitches. Best of luck for the rest of the conference. Thank you.